Okay, now I seem to have a recording. Cool, mate. Let's go to video. Hopefully, we can come through. Okay, crikey, that looks an awful picture of me. Let me go switch some lights off. Just hold on 2 seconds.
All right.
Okay, the good news about doing a recording is that hopefully we can edit the start of this slightly out. Okay, why don't we kick off? So, welcome everybody, and what we're going to do today is we are going to interview one of the members of staff today. So we're going to have a quick chat with Lloyd, and the real subject of today, I think, is going to be Lloyd's journey in system trading. So just chat with Lloyd a few questions. Before we kick off with that, there will be some, I'm not sure if we'll be doing the prizes today. We may do some prizes where somebody gets some lucky attendee gets a chance to share a couple of weeks with me in the broadcast group. If this is a recording, then that won't be possible for them, I'm afraid. Anyway, so what we'll do is we'll just have a quick chat, then we'll kick on with a discussion, see where things goes, and then at the end we'll just do a quick wrap up and maybe some rapid fire questions as well too. So Lloyd, thank you for taking the time, and the great news about doing the recording is that people can listen to this anytime they want. So really, for me, I think it would be just useful for people to know, if you wouldn't mind, just a very quick bio of where you've come from as a trader.
Where I come from in my starting journey, how I get about it all. Well, I really started trading stocks on my own. Yeah, I think that's more than 10 years back. So I started figuring out how to do it via books. And then at 10, one of the biggest names was, of course, Warren Buffett and his gang, Charlie Munger and they all. So I started reading books, started losing a couple of thousands to the market. I mean, I was still experimenting, so ought to lose money, I think. Yeah, so after that, spoke to a couple of other people who is older than me, and they have their own way of trading. Then I began to find my footing in stocks. So move on a couple of years, found ATW, then Forex starts to interest me because stocks I really need to read, keep on be abreast of the news, know what's going on, and find it a bit tiring. Yeah, so I mean, got really thousands of stocks up there. Forex, did some research, then I find that if I really want to trade currencies, strictly speaking, every day or every week, all I need to do is just look at, well, 20 to 30 pairs, that's all. That's a whole lot lesser than 1,000 stocks to look at, to screen. Yeah, so then since then, stuck with ATW. Of course, at then I only learned technical analysis. I was doing pure fundamental for stocks. Technical comes into play, started getting a bit fun because technical allows me to be a bit lazy. Yeah, because I don't need to rely on my emotions or my bias filter to go through what is needed and what is not needed. Yeah, technical is really purely the art of looking at price. Then yeah, since they've been dealing with Forex and specifically trying to come up with trading systems with indicators that with backtested results I can rely on. Yeah, that's about it.
Okay, so when we talk about the if you like, taking some of the emotion out of the trading and trying to find the right way of putting the question. So do you think that when you're starting out as a trader, that you're almost like searching for a methodology and as to how to involve yourself in the market, and the system, you know, having something that you can just, if you like, fire and forget? I'm trying to think of a careful way of putting that, but let's just run with the theory, is actually a really good idea for a beginning trader?
Well, I would say even up to today, what I'm doing is still, there are systems out there which works, you see, but whether does my personality fit those trading systems is another thing altogether. There are scalpers out there. There are people who do swing trading. Like I've tried scalping. The system works, but the trader behind it doesn't work. If in that sense, I cannot marry that particular system, that particular ideology with the way I approach the market, with the way I choose to trust the market. I can't do it.
Right.
Yeah. So many a times, even up to today, I find that when I do backtesting systems, that hey, that system works. But with the combination of the risk to reward ratio, the losing rate, the winning rate, the amount of winners that I can get out of it, can I accept those parameters? That will determine whether I can trade the system successfully. The system itself is successful, can make money, but the human behind it, whether I can accept those, is another story altogether to me. Yeah, that's why I find.
Yeah, actually, and so just following on from that, I recall a little bit of time, back in the past for me, where I was looking at some trading systems that had a very low probability of success, but a very high reward when they triggered. So they would, when they worked, I would win 5, 6, 7 times. When they lost, I would lose 1, but I lost that 1 about 7 times out of 10. And I think that this maybe gets to what you're saying, really, is that makes it mentally incredibly hard. You know that the system's going to work, but you've got to keep persevering with this and keep going. But it's really, really hard. So psychologically, it's very hard, and you can't remove that emotion out of your trading decisions. And you're always worrying that, oh, okay, I know it's 7 out of 10 is roughly where it is, but sometimes that means I'm going to have 10 or 12 losers on the spin, right? And that's really hard to manage. But I know that after that, it'll probably come back and be successful, but I'm just not sure how I can cope with that.
Yeah, precisely. Because, and there are times, even if I accept what the system is doing is completely fine, but I'm sure as traders, we know that there are deviations. Sometimes the system, even if you backtest, get on a normal month, you'll probably get about 20 losers. Out of 50 trades, you'll get 20 losers. Fine, acceptable. But there are months out there that suddenly it gives you 35 losers of 50 trades. I'm like, then I can't help it. Emotions start to creep in. I need to doubt. Have I? Is the lifespan of the system has outrun itself? Do I need to somehow fine tune it, optimize it again? Then that would take another period of time for me to get accustomed to the system again. But then those are just freak accidents. It might just happen one month out of every 20 months, per se. But that 1 month will just upset me that much. Yeah, so okay, I need to cope with that.
I understand with that. So do you, how important then for you is the back testing?
Very important. I would say when I first started going into the school of thought of technical analysis, backtesting was at the bottom of the list. In fact, I don't know how to do it. Then that begs the question, how can I trust the system? Do I trust the trainer who trains me? Do I trust the words of other people who keep claiming that trend trading works? Or do I just put in purely the hard work and doing the backtest myself, which can run into hundreds and thousands of entries and hours just to build that trust? Yeah, so I'm still doing that today with other systems, and it kind of developed into a hobby. I find it quite fun, sometimes satisfying, knowing that my hypothesis worked. Yeah.
Okay, but so excuse me, folks. So that's quite interesting. I found that with me, when I was looking at, because I did a lot of back testing about 15 to 20 years ago, a huge amount. I went and tested every single thing I could think of in terms of, trading systems I could find on the then very fledgling internet and what I'd seen in books to try and figure out if there was some validity to everything I'd seen. As part of my trading journey, trying to develop something that I could automate and that I could just run scanners on, which would make my life a little easier as a professional trader. But I think what I found with it as part of the journey was actually quite a few interesting things as part of the journey. So what I learned was that, to your point, is that every system has a range of, on average, it works a certain amount of time, say 60% of the time is when it works, right? But the not average is actually something that you've really got to be aware of. And in actual fact, you can use to your advantage, because if you believe that the market hasn't changed, then there's a mean reversion principle, right? So if the system becomes only 40% successful, how long does it become that 40% successful for? And then if you've done some back testing and say, well, that's just a change of market state that's occurred, then all I need to do is then wait a certain amount of time, and then the system will become successful again. So then you could say, well, how do I then manage the risk management for that? Am I brave enough to say, once I start to go into drawdown, that at some point within that drawdown process, I've then got to think about not decreasing size, but maybe increasing size. But the only way to know that is to have all of that information to hand, right?
Yeah, precisely. To ride through those, I would say, tough periods, the number one thing not to rely on is my emotions, my bias. That's what I don't rely on. What I rely on is the sheet of data that I have beforehand that tells me confidently, that dictates more or less my action, what I should be doing. Yeah, I need those numbers. I need those data to tell me. Yeah, or rather, how do I put it in a simple manner? I need those things to soothe me out. Yeah, kind of like a mother and baby. It's okay. These are just happenings in the market. Yeah, go over it. It's fine. Do what you should be doing and do what has been proven before. I mean, yeah.
Okay, no, look, that makes sense. It makes sense to me as well too, and hopefully to the listeners out there as well. So when you're thinking about that, let's go back to basics. What's your philosophy at the very beginning about a trading system? So could you just talk us through, when you where the idea or the inspiration comes from, and then almost like after the back testing, how long do you then just watch it for before you then be confident enough to switch it on and add it to your portfolio?
I think I'll answer in two parts. The first part is what I get from question is how do I get onto this systematic trading manner. I think that is thanks to Instagram. Yeah, because Instagram, I started following those trading inspirational pages, and then they keep saying that, look, in the past there are this group of traders, I forgot their names now. They have losing money. I mean, the legendary traders, and then when they become systematic traders with a set rules, so magically their account over a set period of time turns from 4 digits to 6 digits. So when I keep, and then of course I also shared the books that I've been reading. Suddenly forgot those names. Yeah, basically they've been saying the same thing over and over again, the same story told by a different person, but the concept is the same. Then it led me down to this path. Yeah, the second question is how do I develop the confidence to straight away go into the market to trade the system? For me, it's the simplest way is once I back tested, I have sufficient data, then I will just open a micro account and then start trading on a micro account. Yeah, I mean, usually I open a $500 account and then start tinkering the system. Yeah, and see over probably 3 months, the set of data I get, does it correlate with what I back tested? Yeah, so
right.
That's how I do it.
So you don't think about paper trading then? It's really, I want to get going straight away because then I can understand stop losses, how they're working, and whether there's any slippage on the system?
I don't. The first few set of systems that I developed, I did paper trading, demo trading. And then I actually did very well in the demo trading. Completely fine. And I was like, okay, this works. So I plowed about, I think, at 2005 into a new broker. I started trading. Then I realized one thing. In my back test, although I have all the set of data, what I conveniently forget is at any one time I'm looking at 28 pairs or 30 pairs. Thereabouts. In my data, what I do not have is there are certain periods whereby those 28 pairs all happen to give me stop losses. So instead of dealing with a couple of stop losses in that one pair, I'm suddenly having 20 to 30 stop losses concurrently. I'm like, oh crap, that's not working out well. That's why I start freaking out. Then when I think back, I was like, oh, my data only tells me about one pair. It did not tell me about the correlation stats. It did not tell me about those what I call nowadays the basket trading stats. I'm like, okay, that burns. But yeah, it's cool and well. I learned something.
Look, I think there's something quite interesting in what you said there. I was having a discussion in my trading group just now with some of the students, and we were talking about the correlation even last week. So there was essentially a US dollar rally on Friday, right? And we then looked at which markets had the US dollar rally, and well, it happened in sterling, it happened in the euro, it happened in the yen, it happened in the Singapore dollar. You go on. I think the Aussie dollar as well was involved in that. So there's almost these days, it seems to me, there's almost like a correlation of one, which is quite interesting in terms of how you then think about the way in which you design these systems. Because when you're putting a trade on, let's say that you have a scanner, right? The system will give you a scanner, right? And they say, right, this market's triggered, this market's triggered, this market's triggered. You go, wow, okay, they've all triggered at the same time. You on the assumption that you have a similar methodology across the different markets, they've all triggered at the same time. That's notwithstanding any other trades that you've got triggered. So then, do you feel that you're seeing that as well too, happening more and more these days? And what are the steps that you're taking to think about that?
I do see it more and more of these days. I mean, so by and large, I'm still a trend trader. Yeah. So we have the recent USD rally. So anybody who long the USD should have a good time. So assuming 3 months down the road, USD reverses direction, I think that's most of the time where USD long will start to be shedding some sweat, some blood. So with systematic trend trading, the thing is that it does go through those phases whereby I'll get multiple winners and then multiple stop losses. Then nowadays, my school of thought is, do I really need to go through all 28 pairs? Or do I really need to trade 10 lesser correlated pairs? Would that be enough? Yeah, because ultimately at the end of the day, all I want is profits. And the profits does not faze me as much. The losses affects me more. So then again, does that mean, do I need to just trade lesser pairs, non-correlated, which give me a steadier, a better equity curve? Yeah.
Right. Yeah. Look, I think that's one of the key things, right? So when you think about trading now, because you say I'm not sure how many methods or systems you're using. Is it the system itself that you're looking at the results for? Or is it the collective?
Sorry, I feel to answer the question. I do have 3 systems that I rely on. So one is a daily system, one is a 4 hour, and the other is a hourly breakout system. Yeah. To further on to the question is that I do find more and more that these systems, let's say the daily USD is triggered on Monday. The 4 hour actually will be triggered on Tuesday. The hourly might trigger in between those timings. But I mean, when the profits go, it looks good. When the losses start to pile, it also looks completely rubbish to me. I'm like, do I really need to put myself in those situations? Then it becomes that, yeah, the daily and 4 hourly and the breakout, ultimately, are they still the same thing? Because if I'm still dealing with trends, do I need to have more system or scale down? And my tendency nowadays is to actually scale it down. I don't really need to trade that much more of a system. At the end of the day, I'm looking at the same markets. There's just different timing to get in. Yeah.
Okay, so that's interesting, and I think that's actually quite an important lesson to give to some of the attendees as well too. Is that with a trading system, when we look at a trading system, we don't just look at just all on the daily charts. Using multiple time frames is another way to diversify, right?
Yeah, it is. I mean, at the start of my stocks and forex, this has always been true. Diversification is good. then nowadays I'm also started thinking how sometimes am I too diversified to the extent that like 2% into a USD SGD trade. Does it make sense to split into 5 different kinds of entries? But at the end of the day, it's still 2% of my portfolio. It's sort of, when I split into 5 trades, I need to like worry 5 times. Or do I just actually need to enter 1 time? I know the system does work, and I just worry that 1 time per se. Yeah.
Yeah. So actually, I guess some of the answers there were as well as say, okay, so let's say that you start with whatever I'm going to do on this theme that may end up triggering a number of different systems. So I might start with a 2% trade. I don't know. So let's say let's say the hourly chart triggers first, right? Mm-hmm. So you start with 2% there. If then you saw another single turn up on the, I don't know, for instance, the 4-hourly chart, would you then say, right, what I'll do then is I'll take some of that 2% that I've got on that one thing off the table, then stick it in the 4-hourly, and then if it then triggers again on the daily, I'll then keep cutting it down. So I keep it at 2%, right? That's the goal. Have I got that right?
Yeah. So as to prevent myself from over risking and waking up in the middle of night, rushing to my laptop and check. Yeah.
Yeah, look, and I think that's again a really fair point, right? This is how we've got to handle things, and markets have different moments. My sense at the moment is that we are living through a highly correlated foreign exchange market where whatever news, whatever volumes are going through seem to be directly impacting a number of different markets at the same time. Now, there will be at some stage, you only have to look at the difference between dollar CAD and and maybe dollar yen to understand that there are differences in the way that markets are trading, and and different influences that are out there. But the key thing is that you've got you have to think all the time about how you're managing your risk because of these highly correlated markets that sometimes correlate and then simply sometimes just don't and go in completely the wrong direction. I think from my perspective, what I've noticed is that where there used to be correlations, so you could argue that gold and interest rates have a reasonable degree of correlation at the moment. That hasn't always been the case, right? And you also could say that the gold market and the stock market has from time to time a high degree of correlation, but then it simply breaks down and doesn't. And I think trying to look at historical correlations, whilst it's interesting, is really hard going forward. And I think you've almost got to trade it as you see it, as it's happening right now, to try and figure it out. I don't think that you can take a historical view and rely on that going forward anymore. Now, I'm not quite sure why that's happening, but I think that's definitely a trend. Is that something that you're seeing as well too, Lloyd?
I think the markets nowadays I will agree with one of the sentences you said, is that we cannot take what the historical data, the historical values, and go with it nowadays. History doesn't have Bitcoins anyway. Yeah. History doesn't have the crypto markets that's causing a lot of interest. Yeah, so I don't want to say we are in a WAP market, but in fact, I think the first thing one of the very first thing that I learned as a beginning forex trader is trade what you see. So instead of relying on my knowledge or my sentiments of the past, trade what I see. So that means if the particular chart, be it crypto chart, the bond yield chart or S&P or any chart, tells me this, and the basic tenets go, there's a trend going on. This is currently a new swing low, or a retracement. Why not join the fund? Do I really have to let the baggage of my knowledge pull me back? I don't think that's necessary nowadays. That's my thought.
Yeah, look, I think I completely agree with that. I think there is a change. Cryptocurrencies are something that even 3 or 4 years ago weren't mainstream, and about 2 years ago, I think they sort of became mainstream, and now I wouldn't say they're dominating some of the volatility that's taking place, but they're certainly a core part, I think, of a lot of traders' portfolios about how they think about the world. And whether, crypto is is something that you're comfortable with or not, and a lot of people I think are much more comfortable with it these days. It's still something that you've got to look at and be aware of. The crypto market, I think at some point there was a high correlation between crypto and gold. Whereas gold went up, crypto went up, and I think that relationship has broken down recently. But again, this is back to the same thing again, right? Well, and gold's following a different pathway now. But you can't ignore what's going on across the different asset markets. I think that's probably the clear message here, right? You've got to have a think about this and look at what's happening elsewhere. So it's almost like you're looking for what's trending and what's fashionable and have that in the back of your mind. And it doesn't matter whether you're trading a system or whether you're trading, discretionary. I think it's something that's really important for every trader to understand that in some cases, you probably need to follow the volatility. Especially if you're a trend trader, right? You need to be looking at that and saying, okay, well, if this thing is trending but nothing else is, I've got to be there, regardless of whether I like it or not. It's just the way that the world is working now. That I've got to follow that volatility.
Yeah, I think just follow where the money goes. I don't think you'll be exceptionally wrong with that. Go where the money goes, and then after that, just trust your system or whatever method we are used to trading with. Once we change the market we trade does not necessarily mean that we need to change the way we look at the market. I mean, the market is still the market. Price is still price. To me, a huge extent, as long as humans are in the market, not the AI, the humans are in the market, then we will still see more or less the same patterns happening over and over again.
So what's happening for Lloyd at the moment? What are you looking at? What's your key themes right now?
As in key things as a different market. Personally, one thing that's not so much of trading that interests me. My way of studying right now is looking at ETFs, because I think 20 years back, probably about, I would just hazard a guess, 30% of the numbers, 30% of the money are in ETF. Pushing forward today, I would say we got a whole lot more inflow of money into ETFs. And ETFs are not traded by humans, they are traded by AI. But as a gauge, I think that's a very good gauge for when huge flow of money are into ETF. I would say that the market is on a risk-on appetite. Yeah. But that also troubles me, because ETFs, usually when people go into it, they have a mentality of buy and hold. But when they start to sell, the panic selling nowadays seems to be much more, because everybody suddenly is just pulling massive flow of money is just flowing out of ETF at rumors. It's like, is that something I can actually make use of in a form of buying and selling options? Yeah, I mean that's something. That's something I feel I can take advantage of, because to me the outflow of money from ETFs is never just 1% or 2%. Usually it's at a double digit.
Yeah, and look, I think you're raising a really important point right now. I think this is I've got a thesis running at the moment that I think volatility in the world is picking up, and that's the way that's going to manifest itself. To your point, is that you're going to have when the market reverses in some of these ETFs, which essentially sector plays or particular asset class plays, you've got that volatility. When people withdraw money, very quickly the price responds, and I'm not sure that that's been something that's happened as fast in the past. So I think people have withdrawn money, but they've been quite slow to do it, if you like. And now I think that's accelerating and it's happening faster. And that's an opportunity, I think, and it's also a sign that part of this whole volatility increasing. We talk about monetary stimulus, we talk about governments not valuing cash anymore in the same way as they used to, and the value of the dollar going down. And I know there's a lot of people talking about that, and MMT as a new platform, and even the stimulus program that's coming out, right? If you keep on adding more and more money to the system, then inevitably, I think you're going to increase that volatility, which is just about opportunities, right? I maybe tell me about the future for Lloyd. What's next in terms of your thinking around systems? Have you got an idea about where you're going to be heading with system development next?
I think for my main theme for this year is that I'll still be playing with indicators, but those systems which I trust I'll probably try to even simplify them more. And then, am I supposed to say this? Is that I'm looking to trade for more prop firms. Yeah, basically it's just increasing the potential pool of money that I'm able to access to. Yeah, because if my process is the same, then why not look for more opportunities? Yeah, because to me it seems that there are more and more prop firms out there that are giving opportunities to traders who have track records, who are profitable, but just need access to more pool of money. I have money, but why risk my own money? I mean, that's my thinking.
Look, I think that's actually, I understand that. And I think as you develop as a trader, it's quite a big step though, isn't it? When you're going from managing your own money, where you don't sort of worry too much about the results if things go wrong, to looking at it for managing it for other people. I think that's quite a big step. And I think a lot of traders want to give that a go and take that step. And I think some of this comes from trader development, right? You know, what you're really saying is that you're developing as a trader, you want to be more successful and you want to be part of the journey, you want to bring other people along as part of that journey, right? Which is I think that's a key part of improving as a trader. You know, you end up having that confidence enough that you think you can go and do it with a bit bigger capital pool than you can manage yourself. But just having that opportunity is the key thing. And to do that, well, let's talk about this. To do that, you have to build up a consistent track record. Now, within that track record, I think a key element of that is not to be one where you're chopping and changing methodologies, right? So it's the key part of a track record is consistency of what you've been doing.
Yes, absolutely. Probably I can share with this that since I've tested so many indicators and systems, I do find a common trait with me is that when something fails, eventually it will fail. I mean, when I play around systems, new system, I always tend to go back to the system where I trust the most. My gut feeling. That my gut feeling is not something which is random. My gut feeling is the trust of my gut feeling is due to something which I've done over and over again, and so far it has not failed me. That means go back to the basics, back then to the system which I've developed and has lasted me till now. Yeah. So the funny thing is that it has come to a full circle nowadays. Is that don't need to be too fanciful. The simpler it is, the easier that I can spell out how I should go about trading, the better it is for me. I can sleep better at night.
And that's the key message, right? If there's any message to talk to people about, you know, that's one of the key things that I think you have to bear in mind, right? Is that you've got to be able to sleep at night and be able to manage the process of trading, right? Otherwise, life just gets crazy. And I think that's one of the key things about it, because if you can't sleep at night, then you can't concentrate. This is a difficult enough game as it is when you're fully on, let alone when you're trying to manage on less energy, right? I think, which is the key thing. So there's if I could encourage everybody, I know it sounds a bit crazy, sound like my mother, but getting rest, keeping your energy levels up is really important. You can't do that if you're waking up every 20 minutes looking at the screen, right?
I can't. Yeah. Sometimes it's just crazy talking to traders like you, like Paul. I respect you guys a lot. But if I don't trust my system, everything that you all say there, I might rush back to the system and look at it. I don't think that's exactly confidence. Yeah. But the confidence is rather whatever you guys said, I do take it, I do learn it, but that doesn't mean I need to rush back to my system and trying to reintegrate or re-optimize to those words. Yeah,
exactly. Look, hey Lloyd, look, thank you very much for that, mate. Now, just before we go on to the rapid fire questions, I'd like to give a couple of weeks away to somebody from my broadcast group. So to the attendees out there, if you just want to jump in and put BG in the chat, first person to get there will get the broadcast group for a couple of weeks for free. And there we go. I hope I'm pronouncing that right. So that's Jira. Sorry, Dominic, you were just a couple of seconds too slow there, but Jira, I think just beat you to it. Thanks for that, and welcome, and I hope you enjoy the broadcast group. Lloyd, thank you very much. I really appreciate your time. System trading is a really key component to trading, and I can't stress enough how important it is as part of the trader journey, if you'll exclude the cliche on this one. It's incredibly important in terms of learning and building your confidence up, and I recommend everybody to at least try some kind of back testing. I know that sometimes you are following other people's systems, or the systems that we have in the education program. That's great, but it also encourages you to think about what your philosophy of trading is and how you can then improve as a trader over the years, and actually think about whether you need to improve the methodologies that Paul has to change them to suit your personality a little bit better. Look, Lloyd, thank you very much. Just a quick few rapid fire questions. So are you ready to go?
Ready?
Okay, right. Which trader most influenced your trading?
Within Access to Wealth, Mikey, trader Mikey.
Oh, I agree. Nice guy, lovely guy, good trader too. What's one attribute that a trader should have?
Acceptance. Stop complaining, but accept the results.
So true. Favorite indicator in trading?
That's really tough. I would say currently my favorite indicator would be ATR.
Oh, good indicator. I like that one too. Nice, nice. So Joe Biden, savior or caretaker?
Caretaker to me currently.
Yeah. Okay. Okay. Crystal ball time.
Mm-hmm.
What's the price level for Bitcoin in 1 year's time?
1 year's time, with the amount of money that's in the market, I'll guess $1 million.
$1 million?
Yeah.
Like it. That will be interesting. Okay, last question. A speed eating food contest. What food would you choose?
Chicken nugget.
Okay, that I will be taking you up on at some point. Thanks so much, Lloyd. I really appreciate it. And that's all we have time for, folks. And I apologize for just a little hiccup at the start there with the text. Sometimes these things happen. I'm sure next time we'll have it running really smoothly. So look, thank you guys. And always, if you have been, thank you very much for listening. So I'll see, I may not see you guys today in the TTR show, but Paul and the folks will be there a little bit later on. So enjoy that, and I'll see you again in a couple of weeks' time. Thanks, guys.
Thank you, Julian. Thanks all.
Thank you, Lloyd.